Here in this video, we're going to get into what the latest details surrounding AMC are, what the data looks like, what the option activity looked like on Friday, as well as a Middle East crisis update. This is one of the biggest catalysts that could cause big downside in our markets, 10, 20, 30, 40%. It's potentially this catalyst. You could get bad earnings out of Apple coming this week as well. That could be big. You also have the Fed. I want to go over all of these things here in this video. Keep each one around 3 minutes long. Just give you guys a brief overview of what we're expecting. We'll obviously elaborate on this more coming on Sunday once we get new information, probably new details on maybe all of these different things, analyst opinions on the Fed, a deeper update on this situation over in the Middle East. Really give you a final update on Sunday, but I do think we should take this moment of time to just run through everything that's going to be happening in this upcoming week and how this could affect AMC as well as the broader markets, and also a little bit of what my expectations are. So let's go ahead and get into it. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section, guys. So first things first, it's pretty obvious. The last couple of days have been pretty rough for our markets. If you look at the S&P level, on the 25th, you were down 1.44%. Yesterday, or technically Thursday, you were down 1.2%. And on Friday, yesterday, you were down 0.45%, dropping another 0.07% in after hours. So you didn't even get that move up in after hours. The NASDAQ was up about 0.5% on Friday, but the NASDAQ has been falling a little larger every day. The NASDAQ was down 2.5%, then it was down 1.91%, and then today, or Friday, it was up about 0.5%, including that move in after hours. So you're getting a little bit of a bounce here. This is exactly what I expected to see, because you hit that 30 level on the RSI. On the NASDAQ, you're still sitting at 34.40, so you're still close to that oversold level, but I'm sure by Monday, once these numbers actually do fully update, the RSI is probably going to be a little bit higher, and maybe that allows you to fall a little bit more. The S&P, a little bit different. The RSI is at 29.22, so it wouldn't surprise me to see a bounce here at some point. Usually when you get to 30, the RSI bounces. Okay, if that doesn't happen, you're in for an even bigger problem, but that's normally how things tend to go. That doesn't mean we have to rip higher from here. That just means you could trade sideways for a period before you do get a larger decline. Now, first thing I want to get into is this Middle East update. So it looks like a big offensive started overnight last night. And Israeli officials stated that tonight is the night, and the full-scale invasion of the Gaza Strip will begin in the coming hours. Coming hours is a vague term. We need to see how this thing plays out. The U.S. government, if we look at a live update, the U.S. government said that they're basically trying to get some kind of humanitarian truce. Well, technically, the UN is trying to do this, and the U.S. has already said, well, maybe we should just do a ceasefire, try negotiations. Doesn't look like that went all but anywhere, and you're actually getting some reiteration from the U.S. that maybe this conflict is going to get larger. As you guys know, Thursday night, technically Friday early morning, after midnight, like 1, 2 o'clock in the morning, you did see those 2 F-16 fighter jets that actually attacked that Iranian ammunition facility or storage facility. Two different facilities. We really didn't get any other details on that. We didn't see a statement from Iran. We really didn't see much following that. Still waiting to see if there is any retaliation for that. And that is probably going to be a developing story. But here, just not too long ago, Biden says U.S. stands ready to take further action following attacks by Iran-linked groups. And this is obviously because we already, blew up some of their munitions facilities, saying, hey, if you guys don't stop, we're going to get more involved in this conflict. Not exactly great for our markets. Like I've said many, many times, the markets can handle bad news. They cannot handle uncertainty. Now, John Kirby says we're not drawing red lines for Israel, that we're going to continue to support them, but since the very beginning we have and will continue to have conversations about the manner that they are doing this. And it looks like really the barrage is ramping up, and it's probably not going to stop from here. It looks like Israel believes that Hamas headquarters are under the main hospital in Gaza, so you might actually have to go in there and clear out their actual main central command, like headquarters. It's not exactly going to mean this conflict is over anytime soon, but I think the markets will get over this very quickly, especially in this upcoming week. There will likely be bigger things that will drive our markets, but if anyone else does get involved, if the US gets involved, if Hezbollah gets involved, if Iran gets involved, those will be things that will move our markets. Now, in this upcoming week, the thing that's really going to matter to the markets the most, technically two things. I would probably say this is going to be the most impactful thing to our markets, as it typically is. It's the Fed meeting. Now, there's a 2% chance the Fed actually cuts rates coming here on next Wednesday on November 1st, which this is the first time the markets have actually started to price in the probability that we might actually see a rate cut, which is kind of crazy. You're now sitting at, again, 2%. There is literally 0% chance the Fed actually raises rates, so that's kind of crazy. It's really changing the trend of what we've seen over the past 2 years. There's a 98% chance the Fed stays paused, so that's basically what is going to happen. Now, December 13th, the next Fed meeting, there is a 19.2% chance of a rate hike and a 1.6% chance of a rate cut. So, little weird what we're seeing here on the probabilities. But nonetheless, we're going to get a lot more new details from the Fed, what their course of action is going to be likely going ahead into the future. We might get more clarity on how this Middle East conflict is going to change things. Now, we have seen a lot of strong economic data just come out last week. You had a hot GDP report, very hot GDP report, really hot durable goods orders, good personal spending. 0.3% on your core month-over-month PCE. So it doesn't look like we're probably going to get a dovish Fed anytime soon. If we do, then maybe we have a bigger problem on our hands for the markets, and maybe there's something that's going on that we just don't know about. So I'm not expecting a super dovish Fed. I'm actually expecting a pretty hawkish Fed heading into this Fed meeting. So I'm not exactly bullish on the Fed meeting, but it really depends. If you sell off, call it a Monday or a Tuesday, then, I mean, heading into Wednesday, it does make that potential downside a lot less. So I think Monday and Tuesday could be big days as well. Now, there's a lot of rumors speculating and circulating out there that this week could be another rerun of essentially Black Monday. Let's go ahead and see if we can actually pull this up. Let's see. Black Monday. Next week, because I don't know where these rumors came from, but I kept hearing them basically everywhere I looked that Black Monday, another repeat, might actually happen in this upcoming week. Maybe Monday is going to be the day for another Black Monday event. And there are some recent articles 17 hours ago amid Black Monday calls. Keep your wits about you. Wall Street warns a Black Monday repeat just in time for the 36th anniversary, right? There's a lot of people that are speculating on this. You would have to see something really bad happen over this weekend to see, you know, some remnants of a Black Monday again, and that's obviously something you don't want to see. But the Fed's going to be important coming on Wednesday. The second most important thing is definitely going to be earnings here, and this is going to be pretty big. Now, if you are an investor like I am, you're probably not all in your big tech names that have done well. You're probably in a lot of these stocks that have not done as well, like a SoFi. That's a big position for me, right? You have PayPal. That's a big position for me. Roku's a decent sized position. Fubo is one of my largest holdings right now. The risk to reward on Fubo is exceptional. I mean, it's a $700 million company. That thing could 30 or 50x if they play their cards right over the next, 5+ years. Very, very quality company. It's probably going to report really good earnings on Friday. Same with SoFi, same with PayPal, same with Roku, but they have not gotten any love. Now, these individual companies, whether a SoFi, a PayPal, a Fubo do well, it's not going to affect the broader markets. If AMC does well, it's not going to move the broader markets. But if you take a look at Apple, then that's going to be the big company coming on Thursday that will have an effect on our markets. And if Apple does suffer a similar fate as maybe a Google or some of your other stocks that have not done as well, you're going to have a big problem on your hands. So Monday is really the only earnings that is going to be a big mover for our markets. Qualcomm can be important. Supermicro can be important because Supermicro, Qualcomm, they're chip companies. That could affect NVIDIA, which does have a larger weighting on our markets. AMD, same thing. They're a chip company. But none of these companies are big enough to really have that effect besides Apple. And Apple's really the last big earnings to go. If we get through Apple and things are fine, then I will have to be a little bit more bullish on our markets. Now, those big tech names have already gotten beaten down, so you can only be so bullish. But Apple's going to be a big one coming in this next upcoming week. So I think these are all very important things that you guys should keep on your radar. Now, if you look at the S&P 500, take a look at this. You can see the average multiple is around around like 26 or so. The NASDAQ 100 is still pretty dang elevated. Again, I do think that last flush out of big tech needs to happen before you see the broader markets rally back. Stocks like small mid-cap stocks that you are investing in. Basically, the other 490 companies that are in the S&P 500 that have not done nearly as well as big tech, while those stocks might start to do well, or an equal weighted S&P or NASDAQ might start to do a little bit better than even the broader index level, aka your portfolios might start to look a lot better. And like I've pointed out a couple of times, I think this is pretty important as well. Small caps, just on an overall basis, it's been over 500 days since you have hit a new 52-week high. The last time you've seen this was the global financial crisis and then the internet bubble. So if you don't hit a new all-time high, new 52-week high at some point in 2024, you're gonna be at almost 1,000 days since you have not hit a new all-time high or a 52-week high. That's never happened before. So I think betting on upside in this sector of the markets makes a lot of sense. Again, they are going to be the ones that benefit when rates do start to come down. It's not your big tech names. Now, let's take a look at the option activity. What we seen on Friday, you had 3 orders totaling $105.35 million with a positive order value of 57%. Not exactly beautiful, not exactly great, but it's not terrible as well. Like I've said many times, the puts call ratio is at 0.72. I can't find another stock that is more bullish than that. So I do think that is partly why the stock has been holding up so well. We just don't have as many puts as we did before on AMC. So I think that is pretty good news that you guys hopefully should like. Now, free flow out on loan at about 8.25%. Estimated short interest of free flow at 6.68%. $122 million worth of short positions. If you take a look at the cost to borrow fees, sitting at about 8% for the cost to borrow max, cost to borrow minimum at about 1%, cost to borrow average at 1.28%, with about 13.53 million shares that are sold short. Now, let me just end off this video with saying, if things did get really bad in our markets, I think AMC stock on a risk to reward basis still looks really good. I think if you're buying shares at these current levels, the lowest you're going to go is around $7.05, unless you truly did have like a 40% downside move, or 20, 30, 40% downside move from here. Even if we had like a 10% downside move, I don't think you're breaking under the previous low you set back here on September 11th, right, at $7.05 per share. I just don't think that's going to happen. So it really does set you up for an even larger upside move. If you break above that 50-day moving average at $10.69, things get exciting. Your next major level would be around $25 per share, and that is at your 100-day moving average. And I think it's only a matter of time. In my head, it's going to happen. Just what's the timing look like? Is it soon? Is it, a month from now? Is it a couple months from now? I don't know. But but I do expect a rally from here. Some of those long duration options actually don't look too unattractive as well to me. So if you guys want to come see all of the trades that I am making, come get access to all of that information, link down below in the description of this video. Come talk to us, come have a conversation, come get involved in the community. That is what that is for, to help everyone learn and to grow their knowledge, guys. So that is it. You guys enjoy the rest of your day and nights and weekends, and I will see you in the next one.